Getting started in the stock market doesn't require a finance degree or a massive trust fund. If you have a smartphone and a little bit of cash, you have everything you need to start investing today. By the end of this video, you will have completed your very first stock or ETF purchase on the Australian market. You only need 3 specific things to follow along: a smartphone, an active Australian bank account, and exactly 500 Australian dollars. That $500 figure isn't a random suggestion. It's a strict minimum rule set by the Australian Securities Exchange for your first purchase. This makes it the exact starting line for anyone building long-term wealth. Think of a company like a box of chocolates. When you buy a share, you are buying one individual piece of chocolate from that box. You own a fractional piece of a business. Buying a single piece ties your success to one company. If it fails, you lose your money. An exchange-traded fund, or ETF, is different. It bundles hundreds of companies into a single package. Instead of trying to guess which specific company will succeed, an ETF allows you to own a small slice of the entire market at once, significantly reducing your risk as a beginner. If you keep all your cash sitting in a standard bank account, it is slowly losing its purchasing power. Groceries and services cost more today than they did 10 years ago because of inflation. Investing helps your money outpace that rising cost. To combat the market's daily ups and downs, you can use a strategy called dollar cost averaging. You invest a fixed amount of money on a regular schedule, like $500 on the first of every month, no matter what the share price is doing that day. This chart shows the result of that fixed amount strategy over a 30-year timeline. By investing $500 a month with an average market return of 10%, your portfolio grows aggressively, eventually crossing the $1 million mark. Only a fraction of that is your actual cash. The rest is compound interest. Wealth generation happens through time and relentless consistency, rather than perfectly timing when to buy or sell in the market. To actually buy these shares on the ASX, you need an online broker. In Australia, it is critical that you choose a broker that offers CHESS sponsorship. CHESS sponsorship ensures your shares are registered directly under your own name, not the broker's. If the brokerage platform goes bankrupt, your assets are fully protected. Once your account is open, you need to fund it. Open your app, go to the Accounts tab, select Transfers, and then hit Deposits. Before you transfer your money, check the top of your screen. Look for the label that says AU CHESS next to your account number to verify your ownership status. For first-time users, bank transfers can take up to 3 business days to fully clear into your brokerage account. Waiting for funds to clear is tedious. But having the patience to push through this unglamorous setup phase is the primary barrier keeping most people from ever starting their investment journey. With your account funded, click the search area. We will use the ticker VAAS as an example, which is a popular ETF tracking the top 300 Australian companies. The ASX requires your very first purchase of any stock through a CHESS-sponsored broker to be at least $500. Multiply the current share price by the quantity to ensure the total is at least $500. Then choose your order type. A market order buys immediately at the current price, while a limit order waits until the share drops to your target price. For your first trade, select a market order, enter your calculated quantity to meet the $500 minimum, and click the Buy button. Keep in mind, market orders will only execute instantly if placed during live market hours, when the ASX is officially open on weekdays. The moment you hit confirm and the order executes, you officially transition from a spectator to an active owner of the Australian economy. Once you start investing, you need to understand capital gains tax. You only pay this tax on the actual profit you make when selling your shares, not the total amount you invested. There is a major advantage for long-term investors. If you hold the shares for 12 months or longer before selling, you receive a 50% discount on your capital gains tax. The second obligation involves dividends, which are the regular earnings companies pay out to shareholders. You must pay tax on this dividend income, even if you choose to automatically reinvest it into buying more shares. Understanding and planning for these 2 basic tax rules allows you to legally keep significantly more of your compounding wealth over the next decade. If you followed these steps and executed your first trade, congratulations, you are officially a stock market investor. To turn this initial $500 purchase into serious wealth, look for the Auto Invest feature within your broker's app. Setting this up creates a relentless, automated monthly habit, Lock in your commitment right now by typing "I'm going to invest this year" in the comments below to establish your personal accountability. Ultimate financial freedom is not achieved by perfectly timing the market today. It is built through the relentless, automated consistency of your investments